Welcome to this Adult Education Senior University session, Tips for Small Businesses Seeking Capital, a panel discussion. My name is Amanda Smith, and I will be the technical moderator for this session. It is my pleasure to introduce Lindsay Malici. Lindsay is an Economic Development Specialist for the U.S. Small Business Administration's Indiana District Office. Lindsay will be introducing today's topic and also facilitating the panel discussion. Lindsay, thank you for joining us.
Thank you, Amanda, and thank you to Indiana University Northwest Cure for your interest in hosting and putting together this event. It's a really unique opportunity to join by Zoom or in person at the First Financial Bank. So happy to be here with you all this evening. We are going to do some quick intros to our panelists so that you can know who is on the call and who will be talking to us today. And panelists, when I say a quick introduction, I'm talking 20 seconds or less. Just what's your name, your title, your role in your organization, and then we'll give you each an opportunity to get more involved in your organization's mission. So again, I'm Lindsay Malici, and I am with the SBA Indiana District Office. I'm an economic development specialist. So I'm just trying to go out around the state of Indiana, making connections and trying to connect small businesses and entrepreneurs to resources that are out there. And next, I would like to invite Lori up to the camera. I know she's there in person at First Financial.
Hi, everybody, and welcome to all of those attending virtually. I'm Lori Felt. I'm with the Northwest Indiana Small Business Development Center. So we work with small business owners and startups every day.
Great, thank you. And I'm going to turn it over to Amanda.
Hello, everyone. My name is Amanda Askew, and I'm with Allies for Community Business. I am a community lender serving all the entrepreneurs in the entire state of Indiana. Thanks for coming.
Great to have you, Amanda. Anthony.
Good afternoon. My name is Anthony Emanuel. I'm the Financial Wellness Specialist here in Northwest Indiana. My mission is to engage low to moderate income communities by the way of financial literacy to give them access to mainstream financial services. I've been with First Financial Bank for about 2 years, and I'm looking to deepen that relationship with our guest panelists here. Thank you.
Thank you, Anthony. And last but not least, your colleague, Harry.
Hi, everybody. Harry Langman, First Financial Bank Commercial Loan Officer. I have been all throughout the bank, starting retail and credit analysts, business banking and commercial. I work with clients to learn their passion about their business and help them navigate the loan process, ultimately to get the goal of getting their loan completed.
Thank you all. So this is like a really interesting, this is my first time doing like a hybrid model. Maybe this is our new normal where we've got the three of them in the room there with people who have joined in person. And then we've got our Zoom participants here. So maybe this is our new normal. Okay, so now we can get more into our organization's missions and our roles in the small business lending ecosystem. So I'm again, Lindsay Malici with the U.S. Small Business Administration. We are a U.S. federal government agency. We're an independent agency, so we're not under Commerce or USDA or any of those larger departments. We have been around since 1953, and we have counseling, capital, and contracting programs to help small businesses and entrepreneurs start, grow, expand, and recover. Amanda Smith had us on recently, just a few months ago, to do like a dive like into SBA 101, all about us. So feel free to check out the Cure YouTube channel. But I just wanted to be brief here in my comments in terms of our programs regarding capital. So in order to work your way up as you're getting ready to make that funding request, there are a lot of business topics that you need to consider and probably put on paper as you're preparing that request. So I encourage you to go online to our website at sba.gov. You can see our business guide. There is an online kind of blog style resource that you can access 24/7, and you can click on each one of these topics for more information to help you prepare. And you can also see our learning platform. There is another section of our website, which is more like on-demand course style option for you. So I encourage you to go get as much free information there, as well as from SCORE, the Small Business Development Center, and our other partners out there to help you prepare to open or to grow your business. Next slide. And then when you are ready to talk to those resource partners, they provide free or low-cost one-on-one confidential business counseling. So that includes the Small Business Development Center. We've got Lori Felt here today, who's going to talk to you next. We've got SCORE business mentors. These oftentimes are retired, but not always, folks who have owned their own businesses, either currently or in the past, or have some other market expertise in marketing, in lending, in accounting, or some subject matter area. We also have women's business centers scattered around the country and veterans business outreach centers for our business owners who are somehow associated with the military, either themselves as a veteran or as a spouse, et cetera. So you can go to sba.gov to the local assistance tab and put in your zip code to find the resource partners who are closest to you. Next slide, please. Okay, in terms of our capital programs, a lot of people recognize that SBA has loan programs. What a lot of people might not realize right off the bat is that we are usually not the actual lender, except for in the case of disaster assistance. All of our other traditional loan programs are loan guarantee programs. So we are backing the loan that the bank or the credit union or the mission lender is making to help reduce risk for the lender, because starting a business can sometimes be a risky undertaking. So we have our loan programs, and by offering that guarantee to the lender, that can translate to lower down payments, longer repayment terms, and other advantages for the small business borrower. A lot of people don't realize that we also have investment capital programs. So if you are looking at your options for capital and you are interested in learning more about equity investments, kind of like a Shark Tank model where you are offering some ownership or control of your business in exchange for that infusion of capital, we do have a list of those investment partners on our website. If you are trying to go for a contract and need to be bonded, we offer a surety bond guarantee program to help small business contractors get bonded. And a lot of people ask us about grant programs to start or expand a business. And I always have to break it to them that the SBA does not offer grant programs to start or expand businesses. Usually our grant programs go to nonprofits that then provide counseling or some other kind of programming for small businesses. The only time that we grant funds directly to a business was during the pandemic. We do coordinate with some other departments across the federal government who have R&D funding. So if you're involved in some kind of a techie enterprise, then it's possible there could be some research or research and development funding there for you, but that's very specific. Generally, we don't have grant programs. We focus more on the loan programs. Next slide, please. And a lot of times people ask, well, which bank should I talk to first? And as a federal government agency, we're not able to refer one lender over another or show any kind of favoritism, but we do have a free online pairing tool called Lender Match. So you can go to sba.gov and queue up Lender Match. Put in some information about how much funding you're looking for, what your use of proceeds would be, some other information about your business and your project, and that can send out that information to the lenders who participate in Lender Match, and then they can contact you to take the discussion further. However, before you start reaching out to lenders, and we'll talk more about that later, when is the most appropriate time to reach out to lenders? I always encourage people to at least have a draft business plan and some financial projections ready to make the best use of everyone's time. And so that leads us to our next speaker, Lori Felt with the Small Business Development Center, and she is going to talk to you about just that.
As I mentioned, my name is Lori. I'm Regional Director of the Northwest Indiana Small Business Development Center. And I'd love to share a little bit more about how we can assist you with things like getting ready to apply for financing and business plan. I think Lindsay queued up that topic very nicely. So next slide. So, oh my gosh, I hope you can see our lovely faces, the members of our team. Fortunately, this is a team effort, not just me, because we cover a lot of geography. Our center covers the 7 counties of Northwest Indiana, like you see in the big red circle in front of you. If you happen to be located somewhere other than our counties, there is an SBDC center anywhere you are in Indiana and in every other state for that matter, courtesy of the SBA and their funding. So we help a lot of different folks throughout the region, both small business owners and people who are at various stages of starting a business. I mentioned team. We're fortunate to have several business advisors, some of which you see on screen. It's so hard for us to get on camera all at the same time in one place that we're actually missing one person in that photo. But our backgrounds are varied. We all are sort of business geeks. I hope no one minds me calling us that. We have 2 of our staff who are business owners currently while working with us part-time as well. So we're here to assist you at no charge with an array of different things that I'll dig into a little bit more here shortly. Next slide. So yeah, we like to say that we help small businesses at every stage of the journey. So whether you are at the idea stage, really working on fine tuning if this is the right opportunity for you to start at this time, or if you're a small business owner, brand new, or having been in the business quite some time and looking to transition. As an example, I was on the phone with someone just today who was in that transition mode where they were really looking at how best to transition the business over to a longtime employee. So we do assist folks at every stage in that process. And our model is really around one-on-one advising. So typically we sit with people either in person or virtually one-on-one. A business advisor is there to assist you, listen to the challenges and opportunities that you're looking at, what kind of financing you feel you need, and try to find a good fit and help you get there. It does definitely start with business plan, and your overall situation helps guide us to try to find the financing that might be right for you, whether that happens to be an SBA loan or a small or micro loan, or if there might be some local financing programs that you could be eligible for here in the region. Lindsay mentioned projections, and I can't emphasize this enough. What is meant by projections is really a forecast of what you anticipate your business doing in terms of sales and expenses. And we can help you do that. Some of our other offerings also support that effort. We have incredible sources of market research that can be useful when you are trying to determine early on in your business or as a startup what your market might look like. We have a number of resources around marketing strategy. And of course, we do a lot of workshops and events. So an example would be Friday, we taught 17 people hands-on how to use QuickBooks. So now they're better prepared to apply for financing because they're beginning to get their books in order. Next slide. So yeah, we love to see a business owner start with a business plan, even if you don't need financing at this time, even if you're trying to bootstrap your business. It's so critical to try to put your thoughts together. And a business plan may not be as complicated as it sounds or as you think it might be. It's all about the logical questions around your overall plan to start and grow your business. So that involves, of course, what are you offering in terms of products and services to what markets? What makes people want to choose to do business with you instead of other offerings out there? What is your why, or why does this business make sense? How is it going to sustain itself and grow? Other elements of a business plan include, basic, how does this thing operate as a business? Any lender or anyone considering providing you financing is going to want to understand sort of the nuts and bolts of how you operate the business, how you are going to go to market and find more customers and grow. So those are thoughts that you put together in words as part of the written part of a business plan. And then it's all about the numbers, right? It's all about the dollars. So having a well-prepared list of what you're looking to fund, itemized, what kind of equipment, what kind of build out might be necessary, what is it that you're looking to finance, and how much do each of those items cost? That's something the lender really needs to see, because what's on their mind is what is this loan going to go for? I mentioned projections before, and I know this is maybe a daunting part of preparing a business plan. We're talking about those estimates, that forecast on a month-by-month basis, at least for year one of both sales and expenses. Typically, we try to hone in on year two as well. And it's all about helping you understand how cash is going to flow in and out of your business, or what you're looking at in terms of an expansion and how that might change your financials over time. And that's also what any lender will want to understand about what you're doing. So in a nutshell, we assist with those elements of a business plan, and a business advisor can help you move forward whatever stage you're at in doing that.
Thank you so much, Lori, and we really appreciate your partnership. I want to go ahead and pass it over to Amanda Askew at Allies for Community Business to tell you all about their lending programs.
Thank you so much for taking the time to come out today. Again, like I said, my name is Amanda Askew with Allies for Community Business. You can go ahead to the next slide. So quickly, a little bit about us. We are a nonprofit organization, and we serve Indiana and our neighbor state, Illinois. And during the pandemic, we were able to help over 24,000 businesses and disperse about $520 million in emergency dollars, whether it is grant or loan. Keep going. So as far as our lending programs are concerned, we offer two products, which will be a loan or a line of credit. And we offer those amounts, the smallest amount being $500 and the largest amount being $100,000. And it doesn't matter if you are a startup business or if you're a more established business owner, there is an opportunity to receive some sort of funding with us. There are times where we manage grant programs, but not all the time. But if there's any grant programs that we are in knowledge of, we do post that information on our website. All right, so for our business owners who are considered a startup, and for us, our definition of a startup is anybody in business less than 6 months or don't have any reported business income as far as a business tax return or bank statements, we cap those loan requests up to $25,000. And what we do is, the first step is we pull your credit report. And we don't have a minimum credit score, but we look at these top 3 things here, which is, do you have any bankruptcies or collections? Have you been paying your things on time, and your credit utilization? And then from there, we ask for financial statements, being the last 3 months of your personal and business bank statements, and or your 3 years of your most recent business tax returns. What we've seen of people who have a limited credit history, or maybe there's some blemishes on your credit report, there is an opportunity to get a loan with us. We call it the credit builder, and that can be up to $2,500. You are able to get that loan, and if you make on-time payments, there is an opportunity to reapply and receive more funding. So for our more established business owners who have been in business 6 months or more and have reported business income, be it business tax returns or bank statements, you do have the opportunity to apply for up to $100,000. So any loan request above $25,000, we're going to require 3 months of your personal and business bank statements, 3 years of your business tax returns, and a profit and loss, a balance sheet, and an income statement, which the lovely people like Ms. Lori mentioned can help you develop those. Or if you have any type of bookkeeping system like QuickBooks or Wave or any of those, they should be able to help you develop those particular documents to apply with us. And just like our other key partners here, we are a nonprofit and we do offer business coaching sessions, whether it be one-on-one or our group programs, which is called the Neighborhood Entrepreneurship Lab, which is a smaller, more intimate group for more established business owners. And it takes about a couple months to a year, but those applications are actually about to start opening up very soon. So if you sign up for our newsletter, you should be able to receive the information when the Neighborhood Entrepreneurship Lab program application opens up. And our business coaching programs, again, is developed into 3 stages: early stage, emerging, and established. So depending on where you are, you're able to schedule a coaching session. You don't have to get a loan with us to get those coaching sessions. And go ahead. And one last thing I will say is that right now we are offering a 3% interest rate special for our small business loans and lines of credit up until June 30th. So we have been offering this interest rate program for a while, and so it will be coming to a close on June 30th. All right, and then any more information, you can follow us on our website, social media platforms. If you know someone that you would like to refer, you can go to our website under the client section at the bottom, and you can refer an entrepreneur. Thank you so much.
Great. Thank you so much, Amanda. I appreciate all the great information about kind of the tiered structure to some of your programs. It's really great information. All right. And I believe next we have Anthony coming back on from First Financial Bank.
Good evening. My name is Anthony Emanuel, and I'm one of the financial wellness specialists here in Northwest Indiana. And I'm going to discuss with you all this evening our microloan program that we have. A very, very robust program engineered to help, startup businesses or those who may not qualify for traditional lending with the shot in the arm that can actually help them get through any obstacles that a microloan can actually help them get through. Next slide, please. Briefly, this discusses the pillars of community development of our Alive strategy: access, lending, investing, inclusion, volunteering, and education. In order for First Financial to achieve the desired outcome on our CRA performance evaluation and to be appropriately serve the communities that we do business in, First Financial Bank developed the Alive Community Development Strategy to help guide our efforts. Next slide, please. This goes into a little of the background of our microlending program. This program is designed to provide loans to small businesses, generally $5,000 to $10,000 in loan amounts. The lending program is in partnership with the local community organizations that are focused on small business development. Flexible terms are available and rates are also available. It's a 48-month term with a 6-month draw period, and the rate is prime plus 2%. The purpose of the program is to extend credit to entities that may not qualify for traditional commercial loan financing. To be eligible for this business, annual revenues of $500,000 or less, or have 10 or fewer employees may apply for a microloan. Loan applications are made with a financial wellness advisor with the referral of a community organization. All credit decisions will be made by First Financial. So even though the community organization administers the financial literacy portion of it, the credit decision is done by our community development department. Borrowers may only have one microloan outstanding at a time. Next slide, please. In addition to our microloan programs, we have the credit repair and assistance programs. So I'm not going to touch much on the BizFlex loan because that's kind of the wheelhouse of Mr. Langbin, but we'll talk a little bit about the credit achiever and the secure card loans. The credit achiever loan is a loan where money is deposited into an interest earning savings account as low as $500, which is used as collateral for the loan. Every on-time payment you make reduces the loan balance and can improve your credit. The savings plus the interest is earned is available to the client at the end of the term. And we also have our secure credit card. You can open a First Financial Bank secure savings account and make a deposit equal to the credit limit, and that could be as low as $300. You can use the card responsibly to make purchases, and you can make on-time payments and keep a low balance to improve your credit score. We often offer the option to have automatic payments set up with these products, so that way you don't miss a payment and then you put yourself in a worse situation potentially than you were before. So with that automatic payment, it assists on building your credit. And this is just an overview of the micro lending program. So those who are attending in person, I have some of these to distribute to you all to take with you. But for those who are on Zoom, you can take a screenshot of that, or you can visit one of our First Financial Banking Centers, and we can provide you with that information, the microloan.
Thank you so much, Anthony. And again, last but not least, Harry, also from First Financial Bank.
Harry Langman, I mentioned, I've been in banking quite a few years, all the way from collections to retail to credit analyst to small business to commercial. So I know the whole gamut. And commercial basically is just larger numbers, but it's all the same process with what we look at on the banking side to get loans approved. Next slide. So here you have it, just kind of a brief overview of credit loans, business banking, and so forth. Loan-wise, we go through lines of credit, term loans, SBA lending. It just varies on the purpose. Lines of credit can be unsecured, secured by collateral, secured by property. It just depends. What Anthony was mentioning was the BizFlex line and term loan. Those are both unsecured. Basically, the line of credit is a 5-year draw that terms out to a term loan. And then the term loan is you pay an principal and interest over a 5-year time frame. The application's 1 page, information about your business, about yourself, the terms of the note, and then you sign as a guarantor and as the owner of the business. So a quick little program that if you've been in business over 2 years and the credit score is over 700, you can get approved very quickly. It can be deposited and linked to a checking account, and you can start activating it and using it within 24 to 48 hours. Term loans I mentioned there as well. We kind of go with the purpose. The term loans I usually typically deal with are secured. You're looking at if you're going to purchase equipment or a building, or if you're going to acquire a new business, they look at that and kind of use the assets of the business. Sometimes there is some unsecured debt in there, but you're looking at the overall value of the business. So if one company wants to purchase a competitor or that competitor is going out of business, that's a great way for that term loan as well. Or if you're looking to expand and you're renting and an opportunity comes up for a building that'll give you twice the size, plus you'll actually own the business instead of renting the building, that's a great opportunity for that. And then SBA, as Lindsay mentioned, we work as a partner with them. The bank does do the due diligence, the bank approves it, and I guess you'd call this, the SBA would kind of rubber stamp it, and we would move forward and work with their program. Yes, very nice, very nice. So yeah, we work together, and once the bank approves it, it's pretty much a done deal as we go through the SBA process. I haven't seen many issues once it's been approved. So that's the SBA lending portion. Then you just see kind of business banking, First Navigator. Business banking is our kind of startup online banking to make deposits, payments. First Navigator gets a little more involved where you can do wires through online. ACH transfers is also part of First Navigator, where you can collect money electronically or actually send out electronic invoices. They all work with QuickBooks, so it makes it a lot easier. Then on the other side, remote deposit. If you can't get out to make a deposit at the bank and you're getting a ton of checks, they will actually allow you to use the scanner that is in the banking center, and you can scan your checks and they go into your account within the 24-hour time period. So it's kind of nice, especially with today when time is money and you don't want to be out in traffic and gas is super expensive. You can handle all those deposits at your location and take care of it. Fraud control, also incredibly huge. I don't know, I think I got another email today asking me about my mortgage payment from another bank, or they try to emulate the website. So you always have to be careful. Fraud control, one of the things we offer is positive pay. So you give the bank a list of your checks that you've written, and the bank will double check and see what those items have come through. And if something doesn't match up, they contact you. A great way to prevent fraud, not only through paper check, but electronically. So it's another way we can do that. Merchant processing, it's all about getting your money quicker, whether it be, debit, credit card. If you have that money, that card with that person captured there, you're going to get the money a lot quicker than someone writing a check and waiting for a deposit, or running out to the bank and making a deposit. Next slide. This kind of goes over deposit solutions. Just standard business checking, business interest checking. If you're a not-for-profit, you can get interest on your checking account. If you're a for-profit, we kind of stay to the non-interest bearing checking account, but you can always open a savings account or a money market. Then it just kind of goes over how do you access the funds, debit card, online banking, transfers, online bill payment, and then unlimited cash deposits. So if you're depositing cash, you can deposit every day. There's not a certain limit of what you need to do on your cash deposits. Next slide. Now, the last slide talks about merchant services. I kind of focus on that because that's the way you get your money into the account. We have a rep that will come out and help you get it online and allow links to your online for them to make purchases and speed up the process there. If you don't have a person-to-person or a storefront, they can do those purchases online. You can also encourage them to do gift cards, Christmas gifts, birthday gifts, graduation, a great way to kind of stimulate their income and allow them to get more active on their transactions to their clients. Mobile payments as well. If you go out to garage sales or shows, you can go ahead and basically have them take care of that and sell their product outside. Virtual terminals, very similar, same thing. So just kind of a little bit of the merchant services right there. And that's all I really have to cover with that. Thank you for your time.
All right, thank you, Harry, and thank you to all of you. So these are just a few of the really great options that are available for financing Northwest Indiana and Indiana small businesses in general. So we only have 20 minutes for our panel and Q&A, so I'm going to ask for kind of rapid fire responses from you, but we're not going to go in any particular order, so feel free to just chime in at your leisure. So a nice light first question to kick us off. What have we learned from the pandemic? I know from the SBA perspective, with a lot of our relief programs, we were looking back. So we were looking at 2019 financials with the thought process that your 2019 financials probably look better than your 2020 financials due to the pandemic. But if you're running a cash only business, then you ran into problems because we were looking for tax returns and things like that. So part of what we wanted to do here today was to talk about, like, take some of those lessons and, how can we help small businesses, prepare for, hopefully we don't have a future pandemic, but, just prepare for additional funding requests. So feel free to chime in, any of our panelists.
Hey, this is Amanda. One thing I learned during the pandemic is working with the emergency relief programs, particularly for small business owners. It's definitely important to have your business documents in order. And meaning like saving your documents as a PDF. If you are an LLC, then you should be filing certain tax documents. If you are a sole proprietor, you should file as such. So just making sure that all of your documents line up and they're readily available. I know sometimes people say, I started my business 25 years ago and you can't find your EIN letter. But we need the EIN letter. Is like, that's one of major documents that a lot of financial institutions ask for, whether it was pre or post-pandemic. So just making sure that you have your documents in order as a business owner is very, very important. It makes the process easier.
How about you, Lori?
Yeah, related to that, I think our biggest learning was discovering that a lot of business owners maybe had not taken the time to keep their books in an organized fashion, and it made it really hard for them to apply for some of the disaster funding programs. So it's a little bit of an echo of what Amanda is saying, but we've put a lot of resource into training on tools, bookkeeping tools, particularly QuickBooks, to try to reach out and make sure that business owners maybe raise that to the top of their to-do list and finally do tackle books. I know it's not everybody's favorite thing to do, but definitely that came out loud and clear. It was really, really hard for folks to obtain disaster funds without the books.
To echo what the ladies had mentioned as well. Plus, it also brought a huge point is you want to make sure you have a partnership with your banker, your accountant. I mean, as a business owner, you're focused on what you do. You know, you're not familiar with payroll, 941s and all that other tax stuff. That is your accountant. And if you supply them with good information, they can turn it around just as quickly. Because I had a lot of questions about 941s. I've never learned so much about payroll in my life during PPP, which I really didn't want to learn, but you know, that's what happens. But you know, the accountant, the banker are crucial to be that linchpin and kind of help you move through this. Hopefully this never happens again, but that is also that crucial partnership.
So we hear often about the 5 C's of credit. So if, you know, we're going to send out this one pager after the event, so you can also pause it on YouTube if you want to look it over in detail, but it's some variation of these 5 things: character, capacity, capital, conditions, and collateral. So my question for our lending partners in particular is, how do you weight these different areas, or, you know, what is your ideal borrower? Are there like minimum things that you absolutely must have in your underwriting process? Or what are some of the areas that you see most often needing the most attention? So feel free to run with that.
For us, at Allies for Community Business, we no longer offer the collateral-based lending. So no collateral with us. So 5 is non-existent to us. But as far as the other 4, what I've seen that's important, I will say, would be number 1, character. I will put that at 20%, and then capacity and collateral, I will put 40-40. And I say that because we need to understand what money you have coming in the business and what's going out of the business, and then how much capacity you have to pay back. Because what I've seen a lot of businesses say is, you know, we make so much money a week. Yeah, but you paying all these debts as well. So revenue minus expenses gives you what you're really making. So,
yeah, from an SBA perspective, we are also heavily considering capacity or cash flow. We don't want to get anyone over their head, put anyone in a situation that's going to be tough to sustain. How about there at First Financial in the room there?
Actually, same thing. It's all about cash flow. So we want to make sure that this loan makes sense, not only for us, but for the client. The goal isn't to give the client something that's going to be overbearing and they won't be able to make their day-to-day expenses. So that's why it's super, super important. I would almost 60% with that, the cash flow. Collateral, we can always adjust that. We can do some unsecured and combination secured loans. Collateral is great, but it's really about the capacity and the capital, making sure they can afford it. Now, character should be assumed, but sometimes you do uncover some things that you don't want to know, or you learn as you go through the credit report. So, but yeah, I would agree with the 2 ladies there.
Another reason why it's good to establish that relationship with your lender so that they can get to know you. Okay, so from your perspective, at what point should potential borrowers be reaching out to you? We realize that you're busy people, you have portfolios, you have goals that you're trying to meet, but how early would be too early, or what are like the minimum things you would like for small businesses to have ready when they approach you?
So, you know, have a plan, have an idea what the business plan, as you know, as Lori had mentioned, that's super important. They have a vision, they have a goal. They're not just haphazardly saying, I want to do this. There's been some thought and some research done by the client. So that makes it easier on us as well. And I'm fine with them bouncing ideas off of me to kind of see how to get that done. But the key is having some type of plan in place. Once they have that and they start talking about it, obviously if they're going to buy property, you want to have a purchase agreement, you want to have tax returns, and also projections. It kind of flows in what was said by the ladies earlier. So that's crucial. That makes my job a lot easier if I already have some of that, and the client has a good knowledge or an understanding of what their particular goal is with what they want to do.
Ideally, I feel that at what point should potential borrowers reach out to lenders? My belief is that you should reach out to a lender before you actually need the loan. And I only say that because what happens sometimes is that business owners get to a level where business has not brought in any revenue in 3 months. Now you want to get a loan to make ends meet for the business. But then when we ask for those statements, those bank statements, and we don't see any revenue coming in, now it makes it difficult for us to get to a yes. So it's important to probably reach out for lending before you are in dire straits or before you actually need it, or when your business is in a good space and making enough money that it can pay the loan back comfortably.
It's important to reach out early. You don't want to put yourself in a situation where you are desperately needing cash and you're getting into some kind of a predatory lending situation. There are warning signs that you should be aware of when you're out there looking for capital, because some lenders might take advantage of your situation. So be sure to look at your terms. If you are feeling at all coerced or pressured, obviously, don't let that get you into an even worse situation. You want to be looking at interest rates. It's a good idea to shop around. If there are interest rates that are significantly higher than what competitors are offering, that might tell you something. Or if there are fees that are more than 5% of the loan value, make sure that you understand the annual percentage rate and the full payment schedule. Don't ever feel pressured to skip those important steps or to lie on any of your paperwork, because it's really hard to recover in situations like that. So, maybe Harry can step in and save us from that doom and gloom note.
Yeah. Oh, definitely. I agree with you. You want to know, you don't want to come to me needing a loan 2 days ago or 6 months ago. You need to have some advance time, because I can't work, when you're behind the 8 ball, so to speak, with needing those funds. It's stressful for the client, for me, trying to get it through as quickly as possible. And then again, we're now looking at a financial picture that's been stressed because you need the money ASAP. And where you may have seen some cash flow before, now it's incredibly tight, and it's difficult for me to kind of mitigate those issues and tell a story to the underwriter and get it approved. So I agree completely.
Okay, so we've talked about having good banking relationships, establishing that well in advance of needing the capital, but there are other types of partnerships and expertise that you want in your corner. Sometimes I hear it referred to as like the ABCs: your attorney, your banker, your CPA. So from your perspectives as lenders, how important are those other relationships? And we've heard, even if it's not a CPA, we've heard QuickBooks mentioned several times here. So kind of talk on the importance of those other relationships, if you would.
In addition to the ABCs, your attorney, your banker, and your CPA, also have a good relationship with the Chamber of Commerce. So wherever you're doing business, it's important to be a member of the Chamber of Commerce, or if you are a startup and maybe, those funds are limited, just be able to be a part of their newsletter. So that helps you understand what's going on in the small business community where your clients are. I think that's also good to have those type of relationships as well. And then also having a relationship as far as maybe just signing up for like your city council meetings, because sometimes there's zoning things depending on what you're trying to do with your business. You just want to make sure that you are on top of what's happening in the community that your clients are and where you're serving, because you never know where your next opportunity is coming from. But you also want to make sure, if you're trying to expand your business or what have you, that you have the right relationships, or you know who to talk to when those questions arise.
I agree with Amanda. A good accountant can make my life so much easier to tell a story and get the loan approved and allow me to ask questions and offset any type of concerns that the underwriter may have. So it makes my life a lot easier. Definitely think you want to be in the zoning committee, because for the local cities and towns, as well as the chamber. Also, another thing with the chamber, you're going to meet like-minded people. They're all about the business. The really good chambers do an incredible job about promoting business opportunity. You meet somebody, maybe it's room of 30, you don't get all the information, but they'll send you a list of everyone that attended that meeting. So if I didn't have a chance to talk to Lori, I missed out. I have Lori's email and I can reach out to her. I missed you at the meeting. I'm interested in what you do. So it's a huge opportunity, and a lot of chambers understand that, and that's their job to help you promote. I would also say bankers, keep them informed of what's going on, bounce some ideas off of. just like we mentioned earlier, maybe coming in a little bit earlier about a potential need you may have down the road. Also mentors, people that are doing the same thing you're doing. Yes, they could be competition. They could not be. They could be huge. You could be smaller, but you can ask them for advice. And hey, this is what I'm experiencing now. Oh, really? Then I've experienced when I was growing. So they'll give you advice to kind of help you. I mean, once again, like-minded people in the same industry, you talk the same talk basically, and they can really help you out. And my feeling is if I'm able to help somebody, it isn't competition. I'm lifting that person up. So that's another great way to doing it. Also, entrepreneurial groups or networking groups. Once again, you're meeting like-minded people that can give you ideas, or right there, you may have a referral. You do a certain type of business. You know what? I know somebody that is needing that service, or maybe I personally want to do that service. That's another way to kind of just build your networking of people, and you get to know them not only on a business level, but at a personal level. So when something hot water heater goes out, oh yeah, I know Anthony. Anthony can help me out. So it's like a free referral. That's really the confidence and trust that you've gained by learning and talking to these like-minded individuals.
What I heard is Anthony's buying my next water heater. Thank you, Anthony. You're a pal. Okay, we've covered a lot of information in a short amount of time in terms of the different counseling that is available out there, the different credit builder and micro lending programs as kind of stepping stones into small business and commercial lending. We've talked about some of the different documents that are needed and who can help you put those together, some of the additional resources and relationships that are important to examine. But for any of our panelists that want to provide any closing remarks, I invite you to do so now.
During the pandemic and during the time where a lot of business owners were trying to apply for PPP loan funding, they were running into some issues with the way they filed their taxes. I think we should talk around the fact that everything cannot be written off and shown as a loss, and then you bring that paperwork into the bank and expect lending to happen for you magically. I think that a lot of our business owners don't know that piece, and maybe I can kind of offer that up as a talk around or a quick discussion about what's important about filing accurate taxes that reflect income and not losses.
That's a really good point, Anthony, because you want to show what you can do when you're asking for capital. And I think, from what my discussions with different underwriters, like sometimes there are like calculations or algorithms that can take into account things like depreciation. But I mean, overall, I think your point is very well made that, you want to show what you're capable of and show what you can do and make sure you get those tax returns filed appropriately. We did have some questions come in the chat. So Marcella wants to know, when the panel discussed building credit, was that building business or personal credit? So I would like the lenders to answer that one, but Lori, also feel free to chime in.
Well, I can start off. It's important to understand that as a business owner, that you're the one guaranteeing that loan. So your personal credit is going to be driving your business credit. A lot of people think that there's a separation, but it really isn't when it comes to who's going to be guaranteeing that business loan.
Thank you, Anthony. We only have a couple minutes left. Do any of our other panelists want to offer any closing remarks, or are there any questions in the room there?
Lindsay, we do have another question from Corey. He says, as the business owner, we are the guarantor of a loan, but do you still report that on behalf of the business so we can grow our business and our personal credit, or does it just go to the personal when you're reporting how much we have a loan out for?
Hey, this is Amanda. I know for us, we do pull your personal and we report to personal. If you have a business credit profile, there is a document that can be sent over that we can fill out to have that information added to your business credit profile to start reporting there as well.
I'll cover on a point with the bank. We do have something called the business FICO score, which is tabulated basically on how you're making your payments for your payables to your suppliers. So there is a score that does report it. So if you are late and it does knock the score. But a lot of times, we do pull up the D&Bs and we go by that, but most of the time it is pretty strong. It just depends on how you're making your payments with your suppliers as we take a look at it.
Amanda, Lori, Anthony, Harry, thank you so much for participating on our panel discussion. I know we barely scratched the surface, but these conversations can continue there in the room, and you've got here our contact here on the slide. So feel free to reach out to us to continue these conversations.